Hello there. Let's talk about what's been happening in the housing market. The news last week really shook up interest rates. The economic data we got was actually a lot stronger than experts thought it would be. People are still spending a lot of money. Companies are ordering plenty of expensive, long-lasting products. And the key inflation number called core PCE surprisingly went up. All of the strong economic activity made the bond market nervous. Essentially, people trading bonds decided that the economy is so healthy right now that the Federal Reserve won't be able to cut interest rates as quickly or as often as they hoped. Because of that, the interest rates shot way up. The rate on the 10-year Treasury bond, which influences mortgage rates, has jumped quite a bit since the Fed's last meeting. Seems the economy is just a little too strong for the Fed to feel comfortable. Now, even with all that strong data, a lot of people in the financial world are still holding on to the idea that the Fed will cut rates. Right now, Fed Chair Powell keeps saying they need to be much more confident that inflation is truly heading back down to their 2% goal. And while overall inflation has slowed down, prices for things like rent and services are still high, and that's creating a challenge. Plus, the job market is still really strong. We're seeing very few people applying for unemployment, and wages are still growing. All these factors point to the Fed taking their time. It looks like any rate cuts might be pushed well into next year, 2026, unless we see a clear sign that inflation is truly cooling off. Even so, the market is still anticipating the Fed will cut rates twice this year. Looking ahead, this week's going to be a big one, especially for jobs data. We'll be keeping a close eye out for any signs that the job market is finally starting to cool off and that prices might be easing up. If the new data comes in weaker than expected, it could get people excited again about the possibility of the Fed getting less aggressive about rates. But if the reports come back strong again, it will just solidify this current situation where interest rates stay high for a longer time. We'll also want to pay attention to any speeches from Federal Reserve officials this week, as even a small change in their language can make a big difference in how the market reacts. Just so you know what the specific important reports are, we'll see the JOLTS job openings on Tuesday, the ADP employment report on Wednesday, the initial jobless claims on Thursday, and the big September employment report on Friday. These reports give you a clear snapshot of how healthy the job market and the overall economy are. And that information is what the Fed uses to make its decisions about interest rates. And I'm Albert Stepniak, a realtor with Coldwell Banker here in beautiful